Here's something most realtors won't tell you. If you only plan to stay in a home for 3 to 5 years, buying in Dallas in 2026 could actually cost you more money than what you expect. And it's not because the market is crashing, but because most buyers underestimate things like property taxes, insurance, interest costs, and what it really costs to sell later. At the same time, DFW buyers finally have more leverage again. We're seeing more inventory, builder incentives, better sellers concessions, and fewer bidding wars. So in this video, I want to break it down: who should buy in 2026, who probably shouldn't, and why your timeline matters more than almost anything else. The biggest mistake I see buyers make is focusing only on the price of the house, and that's usually the wrong number. The real question is this: what will this home actually cost me every month, and does it realistically fit my lifestyle? Because affordability is still the biggest issue for most buyers in DFW right now. And it's because your mortgage payment is more than just principal and interest, especially in Texas. You also have property taxes, homeowners insurance, possible PMI, HOA dues, and maintenance costs to factor in. And in many North Dallas, Texas areas, property taxes alone are over 2%. So buyers see a home online and think, okay, I can afford that price. Then taxes and insurance hit, and suddenly the payment is hundreds more than expected. And that's why I always tell my buyers, don't shop based on price, shop based off of your payment comfort. Because if the payment stretches you too thin, the house becomes stress instead of stability. A lot of people still think you need 20% down to buy a home. And most of the time, that is completely not true. Some buyers qualify for 3% for conventional loans, 3.5% for FHA loans, or even 0% down for VA loans for veterans. But you still need a plan for closing costs, inspections, moving expenses, and emergency savings after closing. The good news is buyers finally have more negotiating power again in DFW. We are now starting to see more seller-paid closing costs, builder incentives, rate buydowns, and repair concessions. Here's the part almost nobody talks about. A lot of people assume if home prices go up, I automatically make money, and that's not always true. Buying and selling real estate comes with real costs. You have to factor in commissions, title fees, repairs, moving expenses, and buyer concessions when you sell. And during the first few years of a mortgage, a big portion of your payment goes to interest and not equity. So if you plan only to stay in the home for 3 to 5 years, there's a real chance appreciation may not outpace your total costs. And that's why your timeline matters so much. Real estate is usually a long-term wealth play and not a short-term one. So, should you buy a home in Dallas in 2026? Maybe. But the better question to ask yourself is, does buying fit your monthly budget, savings, and long-term plans? Because buyers finally again have more leverage in DFW. But timing the market matters a lot less than buying responsibly. And if you want help figuring out whether or not buying or renting makes more sense for your situation, drop a comment below or send me a message. And follow for more honest, no hype DFW real estate advice.